Hello, everyone. Welcome to our Financially Forward Masterclass series for working women. So, this is our sixth session out of the two modules. And before this module started, we did a money energy session also. And I'm Smita, and I'm co hosting the show with Poonam. I'm a chartered accountant and a coach. And before we get into this today's session, I'll just do a recap of what we've done so far. In module one, we talked about money, money and daily finances, basically, wherein we talked about smart swipe, about debit card and credit score. Then we had a session on decoding of salary slip. Then we did on budgeting. Then we did a session on emergency fund. And then we ended that module one. And the second module was all about savings and investments essential. And we started the first session on the module two with the mutual funds, and the remaining investments we'll be talking about today. So let me hand it over to Poonam to start it.
Hi everyone, Poonam. In the module 2, we are talking about where are various investments and saving options. Savings, it includes for the short-term liquidity or for the long-term growth or the retirement purpose or for the wealth creation. But of course, keeping the financial security in mind. And in this area, we touched upon two things, the mutual funds and SIPs. Now, there are many options where we can invest for a short-term for a short-term and long-term requirement purpose. And today we'll touch upon all these, majorly all these. And we have seen that for the current financial year, that is from 1st April 25 till 31st March 26. For this financial year, in the new tax regime, the exemption limit is slightly higher, that is 12 lakh. And just because of that, the new tax regime is beneficial for majority of us. If the new tax regime is beneficial, now our perspective has changed from saving from the tax saving purpose to goal saving purpose. Now, our goal is retirement. Our goal is for wealth creation. Our goal is for liquidity. So now the focus has shifted from the tax saving to the goal saving. And today we will discuss various options. So, Smita, like we discussed PF. PF is Provident Fund, but there is a similar term called PPF. So many people get confused that what is the similarity and difference between PPF, who can invest where, and what are the tax implications of this. Would be like to listen your thoughts on this.
So PPF is Public Provident Fund. So it's a provident fund in which anybody can go and do an investment or savings into it, transfer money into it on a regular basis. But the thing is, it's very different from an employee provident fund, because in an employee provident fund, the company where you're working, some money, part of your money, the company takes it from your salary and deposits it to the EPF. So there's an employer fund and employee fund, and there is also something called pension scheme, also part of it. And in that, what happens is, when you're working in an organization, after you've left the organization, even as a part of your retirement, or when you leave it because of you voluntarily retired, or you're moving companies as well, then what happens is, till 3 years they keep the money and you get an interest of 8%. But after 36 months PF, you cannot keep it in the EPF, because what happens is the company will stop giving you interest. So you will have to take out the money to invest somewhere. So that is the employee provident fund. So different is public provident fund is a little different, where you are depositing. So what happens is, here there is a lock-in period of 15 years. There's an interest you get, so anybody can do it. So what, in case you're planning for a retirement earlier, you can actually start depositing some money in PPF as well, along with your EPF. So it's not that you have to do only in PF or only in EPF. You can do either of it or both of it. So it used to earlier it used to in the old regime, there are two tax regimes nowadays, like old and new. Old has those deductions and exemptions. So in new, there are no exemptions and deduction available for this. But what happens is, not if you want to, it's a government backed PF. So if you want a secured income later on in that life, it's a good investment to do.
And taxation.
So from a taxation purpose, like in old it is beneficial, but in the new one it's not. It's a new scheme. It is not beneficial as such.
Okay, great.
But it's a tax free. So when you withdraw the money, it's a tax free. That's the only benefit you get. But yeah. So it doesn't come in that 1,50,000 bucket of the old tax regime, which used to get in the new tax regime. There's no benefit like that. But yeah, in case you want to you have a secured investment for your retirals, it's a good way of investing.
So unlike mutual funds and other savings, which get taxed at the end of maturity or redemption, it won't attract any tax on that.
It's tax free at every stage. Yeah.
Okay. And people usually also have heard the term equity linked savings scheme or ELSS. Very
Yeah.
beneficial in the old tax regime, but many of us would like to know that is it still exist? Is it still beneficial in the new tax regime, or what exactly it is? So, your thoughts on this?
So ELS is also like a typical mutual fund, but which qualifies for a benefit of your ATC, which is your deduction, which is a 1,50,000 with the old tax regime. But in the new tax regime, again, it's not there. So, but the thing is, so you don't nowadays we do not look at anything from a tax perspective. Also, you should also look at the way you said it. It's either the wealth creation, so making your money grow, or it's like liquidity. All of the three parameters along with taxes also need to be considered. So yeah, ATC benefit is not there. It doesn't qualify for that 1,50,000. But what is the benefit of this? So it has a 3-year lock-in period. One thing which is not readily available. It's not very liquid in a way, but it is available after 3 years. And what happens? It is market based, so it is has little bit of risk also in it. And so there is so in new tax regime you will not get a tax benefit of it, but it will get higher returns basically. So that's a high return is there over here, so that's why people go for ELSS now also, even though tax benefits are not there. And even after 3 years, there's a if there's a gain, you can even you can get a long-term capital gain tax as well on that. But that tax gains, there is limit that till one certain point you are not taxed. After that point, if you receive money, it will be taxed. So yeah, so it can also come into bucket of long-term capital gain. But what happens is the rate of interest is very high, 12 to 15% as compared to the others. So that is why people prefer doing it. It's a choice, it's a preference choice what you want to do.
Yes, indeed.
So Poonam, we've talked about this PPF and ELSs, and last session also there were people who were asking us questions about FDs and RDs and comparing it with mutual funds. So let me give it to you to talk about FDs and RDs now.
Uh, let's first start with fixed deposits, almost everyone's favorite, and particularly the parents and the grandparents one, the elder generation. So, because this was the major major option for the investments. Fixed deposits, as the name indicates, you keep amount, a lump sum amount, in, into a particular bank for a fixed period, and that deposit you cannot withdraw for the limited period, say 1, 2, or 5 years, the lock-in period. But the rate of interest is relatively high as compared to saving bank account. And generally, in today's scenario, the rate differs for 1 to 3 years is 6.6% to 8.25%, depending upon the bank. But in case of senior citizens, they get additional interest rate of 0.5%. For example, if I get interest of 8% on particular FD, then my father will get it 8.5% FD, but slightly higher interest rate. And thus FD can be from very short period to very long period. For example, it can be from 7 days to 10 years, and the rate varies. It's less than 10 crore or more than 10 crore investment. So this is the lump sum amount we have in our hand. But suppose I am a salary person and I can just invest very small amount of money from my income. So instead of parking, waiting for the long term to make investment, I just keep apart some money. That is, it still goes in deposits, but it is reoccurring, means happening again and again. This amount to a deposit account, and the RD rate is almost same as the FD rate, but FD at the end of the tenure would generate more income as compared to RD, because initially the more amount is invested And in recurring deposits, the slower amounts that the fund or the corps grow gradually. Now, from the taxation purpose, that's entire income that we earn on interest on FD or RD as interest is taxable. So if I earn 7% or 8%, 7 or 8% would be added to my income and it would be taxable. But the thing is that those who are in the higher tax slabs, that's who are in the 20 or 30% tax brackets, it won't be that much beneficial for them because on this income as well, they get they have to pay tax on it. But in case of a senior citizen or anyone who has a income which is lower than the 12 lakh for this current financial year, then of course the entire interest earned on FD won't be taxable. So if one wants to park for the emergency fund, if wants to maintain the short-term liquidity, and all those persons who are just starting putting their money and they want a safe umbrella to be with them all the time, then FD and RDs are the good options. But those who want to generate higher returns, plan growth and retirement, it won't serve that purpose.
Mhm. So, Poonam, I also wanted to add here something like Form 15H needs to be submitted to the bank so that for senior citizens, they're not aware of these things. So sometimes TDS gets deducted because you need to tell them that you do not have any other source of income. This is the only source of income. And it also falls below your taxable limit, then they do not deduct your TDS. And another thing also happens with the senior citizens, if they want to withdraw, there is a sometimes you have to read the clause of your FDs of various banks that if you can take it, if you're doing it for a short term purpose, for example, you're keeping the money for 30 days in the FD, then don't make sure that you're not putting money because of the higher rate of interest in for a 1 year and then withdrawing at 30 days, because lot of banks give you the options of different rates for different duration as well. So be mindful of that. Sometimes you might pre-closure charges can come in, so instead of making money you might also encounter a few charges. So
Yes.
that also happens.
Yes, indeed. So tenure should be selected appropriately. That it can be from 7 days to 10 years. We need to select it appropriately. And 15G and 15H both are there. Those besides senior
Yes.
citizens, they don't want their tax to be deducted. They can submit this form to the bank before the starting of the financial year or at the time of making the FD. Because if they submit during the year, it won't bank won't give them the credit of this. Uh, okay, so far we have seen PF, we have PPF, we have seen ELSS, we have seen RD, FD. Now these seems to be the safer in the safer umbrella where the return is relatively low, but person feels secure. But the one which gives the highest return but the risk is also high, and that is none other than equity. Yes. Now, what are the when do you think one should invest in equity, and what are the journal returns on that, and who should invest it? Just your thoughts, your views on that.
So, Poonam, direct equity means like you're buying shares, investing directly into the stock market. For that, you might need a demat account, some knowledge of the markets, how the stocks are doing, so that you can invest on it. Because what happens is it's a risk which you're taking of your money. And is there a tax benefit of it? There's no tax benefit, but there can be long-term capital gain and long-term capital loss, or short-term capital gain or short-term capital loss on it. So the benefits of loss can be adjusted with your income, but when the gain happens, you need to know how much. When is the gain happening? When you're if it's happening within 3 years, then it's a short-term capital gain. It could be as much as 15%, and if it's a long term, it could be what you call 10%, and it also has its own rate as per the slabs basically, and the exemption limit. So accordingly, so I'm not sure of exactly the exemption limit. I think it's about 1 lakh 25, 1 lakh. It keeps changing every year, and then also it becomes higher. So it goes into special rate of tax also. So in case you have a regular income, salaried income, and you have these stocks as well, and you're gaining out of that, and then it is becomes an additional income, additional tax for you also. So make sure where you're investing, the risks are higher, but do your diligence before you invest your money. So you can, we had discussed about various platforms last session about like Grow, ET Money, or you call Indie Money. All of those apps can help you to look at their dashboards and decide on which are good, basically which ones you can opt for. That is one thing which you can talk about stocks. But yeah, you have to be really really careful where the market is going and then invest. And also there are a lot of information available on the net. People do their YouTube videos also. There are graphs available to get more clarity and understanding how the graph is looking. Basically you need to know how to read the charts, basically whether the stock is going up, going down, not in terms of 1 day, 3 months. It's like a year or 3 years also. You look at how it has been performing.
Yes, true, Smita. It's one should have a long-term horizon before investing in equity shares. And equity, I have seen people are losing money, people are making money. So the important thing which I learned, not by investing, but from the experience of my friends, that's if you can go deep research, then invest in long term because it's very risky. And if you can't do research, but you can take the help of some person who is expert in the stock market, then it is wise to invest in the stock market. Otherwise, just explore other avenues where you can put your money. Because here, because of the high risk but the relatively high return, the chances, the probability of losing money is equally high.
Yeah, Poonam, you're very right.
What's
So there are courses available. There are a lot of resources available to update yourself. So we have a limited time, so we are not doing those in-depth sessions. But
yes,
yeah, you can. There are
absolutely.
lots of materials available. You can take help of ChatGPT. You can take up help of YouTube's. You can take up a lot of courses on Udemy. There are a lot of stock brokers also doing a lot of courses. And even these platforms like Grow, Indie Money, ET Money, they also have courses to update or give you information so that you're taking a conscious decision of having the knowledge and not getting blindfolded by people's information and just going ahead with it. You're getting your information, you are deciding for it. Unless until you don't take a decision of putting the money where you want to put in the money, it's of no use because you're not understanding your money. So money is something you need to take care of.
Absolutely, absolutely. Rightly said, the money that we can need, we can take care of, and
Mhm.
not depending on others to advise. Rely more on that.
So,
Absolutely.
yeah. So just if Pune, we see, right, learning driving at a later stage of life, it's very difficult. And when you're young, you're very bubbly, you will learn easily. So probably at different stages of your life, it's the risk appetite differs, and accordingly you can make those choices, basically.
Indeed, indeed. Some are like at the early age, it's difficult to jog and run, but at the older age, it's even difficult to walk. So, at what pace, in which venues we should invest, we should be careful. Indeed.
Yeah. So Poonam, so I am from South, so we normally invest in a lot of jewelry, small jewelry, gold. So gold is very important to us. Uh, so I want to now talk about what are your inputs or intakes around gold bonds and all, and plus the jewelry. I'm very curious to know how do you invest in that.
Okay. That's gold, almost close to every woman's heart. Almost
Yeah,
women,
yeah.
they like gold, one or the other form. And for the financially smart people, sovereign gold bond, and those who are don't want to take much risk is a good option because just like it is under the secure umbrella and it is a government security issued by the RBI on behalf of the government. What happens is that what we do, a traditional way is to take gold, buy it, keep it at your home, and when needed, just sold it at the current market rate. Making charges would be deducted, and you will get the value. And of course, it is beneficial. The another way, the latest way is that whatever amount of gold we want to buy, with small amount, we government has issued a sovereign gold bond, is GB, we call it in short. So we invest the money at the end of the maturity period, and now this bond's maturity period is 8 years. whatever will be the market value at the end of that period, we get the equal amount, that is the market value of that board at that time. But besides that, we get 2.5% return annually on our investment. For example, I invested only 10K or someone invested 1 lakh. So we get the interest income on that 2.5%. But and this 2.5% income is added to our gross income and it is taxable at the normal rate. And if we keep the gold till the end of the period, at least 5 years plus, then it won't attract any tax. But if we sell it prior to that, that is for less than 3 years, then the short-term capital gain, and if it is more than that, long-term capital gain would be attracted at the time of sale, and that is taxable in your taxable income. So, those, uh, sorry, you're saying something.
Yeah, Poonam. So, yeah, Poonam, what I'm saying is, so gold, investing in gold bonds and gold is for stability, and PF and PPF is basically for your safety, right? And ELS is for your growth. And probably what I also understand the way you put across this FD and RD is like it's a short-term comfort, basically. So I mean, it all gives me a good feeler, like having like in a thali when we have different small katoris with vegetables and all. It's the same way that if you invest in different pockets, different amount of money, different pockets, not putting everything in one, it's a good way of investment.
Yes, and this is the fundamental rule of that is portfolio management, that should not put all your eggs in one basket. It should be diversified. And at the same time, the most options are related to the short term or the liquidity. But at the same time, if you want the long term growth or the retirement benefits, the ELSS kind of mutual funds or equity kind of funds or the mutual funds that we discussed last time, where we can keep in either equity, hybrid, or the debt mutual fund for the longer run, and it will help us in the retirement plan or the money growth purpose. It will help. So we have various options. We can choose, select, and bucketize as per our requirement. So Smita, we have one chart where we have that's we together worked on that. We listed down and.
Yeah. I think you can put it across, so because that will be good for everybody to see it. Yeah.
Exactly. So let's see that what all are the options and which is beneficial for whom. Is my screen visible?
No, we can't see your screen.
Maybe
Can't see.
it will take 2 seconds. Let me, Smita, a minute, please. Is it visible?
Yeah, you're presenting. Yeah, it's. Yeah, so if we look at this, we've covered on the bank deposits, that is FD and RD, right? And this is covering it talks about the return, it talks about the lock-in period, it talks about the taxability. If you want, you guys can all take a screenshot of this so that it's an easy reference basically. And what are the benefits of it? Yeah, so we've covered these two, and also how it's helped the senior citizen, and also different bonds available.
There is a separate scheme, but here the rate of interest is relatively higher. But here the lock-in period is 5 years, so they cannot withdraw before 5 years. But they get the return, like they get the payout on every quarter. And those who have like the senior citizen, they have the very handsome money in their hand, and they just want to earn income on that, but relatively higher income, they can choose this scheme. This scheme is available with various banks.
Yeah.
Senior citizen scheme. Of course, only 60.
Yeah, so even. But yeah, there is taxation.
So generally, the senior citizen, if their threshold, like they don't have the other income and they only have the FD income or the saving income or even the rental income in some cases, if it is up to 12 lakh, then it won't attract any tax on that.
Poonam, we had also worked out on the other kinds of investment apart from the FDRDs. If you can put that also, it will be useful.
Yes, sure.
If
And
we take a
any
screenshot of it, yeah.
question on the screen?
Does anyone have any questions for this? So I think, yeah, we can go to the next one. So yeah, it is an exhaustive list because we covered all of those things like PPF, mutual funds we had covered in our last sessions. ELS also we covered today. Stocks we covered today. We covered the gold bonds also. Yeah, we did not cover the REITs because I don't know how many people know about REITs. REITs are real estate investment trusts basically. So it's like a like a mutual fund, real estate in mutual funds basically. That's what you can say, or a mutual fund for real estates, whatever the terminology you want to use. So again, it's for people who want to have a passive income, and it's for the investors because there is capital gain and short-term capital gain rules applicable here. So here again, lock-in period is 3 to 5 years, and the interest is higher. But the thing is, the only people who are looking for passive income and they're okay to invest huge and lump sum amount into this real estate, then it's good for them. And also there's a franchisee business which happens, which is like your cafe coffee day ka branch opening up, or any other chayos ka you see another franchisee being open up. So that are also there, which people take a franchisee for. Again, there are benefits to it. There's a ROI available to it, like 15 to 25%. And also the income from those franchisee will be not on a regular kind of a taxation. It will be getting into a business tax on business and profession. That's another head in the income tax form we see. So apart from salaries, rental, other sources, there is another one which is called the tax on business or profession. So your income comes under that slab also. And it is basically people who want to look beyond doing something apart from their salary income or the normal businesses. That is how those people opt for it. So broadly, these are the investments which we thought we will bring it to you so that you get an idea of where you can invest your money according to your appetite of risk and the way you want your money to grow, whether it's for wealth purpose, it's a short term liquidity, long term, so or a goal based. These are the way you can invest and diversify your portfolio, not put all the eggs in one basket. Yeah, diversify your portfolio in a way which is good for you. So one rule may not apply for everybody. It all depends upon everyone's income, the age, all of those things, which help you determine what kind of investment you can make. So Poonam, you want to add anything? You can add. So this table has everything. You can take a screenshot of it for looking at it later on, or asking questions to your own chartered accountants you have, or taxation people you are referring to. You can just ask questions relevant to your income sheet and how you can plan about it. Yeah, Poonam, sorry, you can add whatever.
No, you already covered everything, Smita. Just if anybody, after looking this sheet, they have any question and they would like to discuss with us, we are happy.
So as per 25-26, the long LTCG is 1.25. I was thinking it was 1 only. It's changed.
Yes.
Yeah.
For last year, like 24, 25,
25 onwards, yeah.
Yeah, it was changed.
Because I did not have this time's short long-term capital gain, so probably that's why I don't remember the. Yeah, Gokila, yeah, tell us, what is there any question you have?
Yes. I know the other investing options, and I don't know about that ELSS. How to invest on that, like PPF in our bank account, to bank account or post office. I don't know knowledge about that ELSS.
This is also is kind of a mutual fund. It's a typical fund which has a 3 years lock-in period. You
Okay,
can
mutual
check.
fund means we can use that Grow app like that.
It should be available in Grow app also.
Okay. I'm asking in that Grow app, we used to see lot of mutual fund schemes like that SBI mutual fund, HDFC like that. For ELSS means it is a ELSS is a mutual fund, or this is a scheme we have to invest in any other mutual funds?
No, no, it is like an equity linked one basically. So it will be separate one because it is not like another mutual fund. It has a because it has a specific talk about tax saving because it has a benefit of tax saving of 1,50,000 bucket. So it will come differently. So even in your normal mutual fund, it will be for tax benefit. It will come, and it will also have a 3 years lock-in period.
Okay. Okay, Smita, thank you.
And we discussed that mutual funds you can invest in debts or hybrid. Here, the investment is wholly in equity, which is more risky. But earlier in the old tax regime, if you still follow, then it will fetch some reduction. But in the new regime, it won't. But the investment in the mutual fund is made in the equity shares.
Okay. Thank you. Thank you, Smita.
Pavitra, you don't have any question today?
So Gokila, there is something called SBA Long-Term Equity Fund. It is an ELSS. There's a Motilal Oswal ELSS. These are all examples of ELSS fund.
Okay. Okay, thanks, Smita. I will check that.
Yeah, yeah. So I think Pavitra is not here now, I think. So are there any more questions for us, Rani or Gokila?
I don't have any question. That's it for now. Thank you.
Regarding rates, ma'am, where can we find the rates to invest in rates? In which platform? Are they available in platforms, or
For which rates are you talking about?
if we want to invest in rates, real estate?
Real estate, okay.
Yeah.
So real estate information, it is called REIT basically. It's a real estate mutual fund basically. It's like a trust where you can go and invest basically. So that information is also available on these apps as well.
Okay.
So I think Poonam, it's a good time to wind up. So what are we covering next week, Poonam?
Next week is very interesting topic. That is the health insurance. So
Okay.
health insurance, why it is important. So most of us, majority have health insurance. Some because they are working in corporates, and others that do not. So why should they have? What should be the limit? And all these things we will going to discuss in the upcoming session on coming Friday.
Okay, cool. So let's end the session for today and looking forward for that session. I'm also interestingly looking forward for that because I also love talking about insurance because I have made my own mistakes and I've also benefited from this health insurance by taking on myself outside my organization and within the organization also. So yeah.
So let's share our experience that what mistakes we did and how others can benefit from them. And of course, if you have your experience, we would like to hear so that we can benefit from each other's experience.
Yeah. So being working woman, we what happens is we normally take breaks basically, and in that breaks, if there are no insurances, what happens? What can go wrong? So probably all of those things when you plan your maternity, when you will have plan for your old age parents, and all this very interesting topic. So let's talk about it more on the Friday. Okay. Thanks, Rani and Gokul. So let's close the session for today. Thanks everyone for attending.
Thanks, everyone.
Thank you. Thank you.
Have a
Bye.
great time ahead. Bye bye.
Thank you, ma'am.
Bye bye.
Thank you. Thanks for your time. Thank you.
Bye.
Bye.